Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon. Happy Monday.
Happy Monday, not for Disney investors though, right? Or at least not for the last 5 years or so.
Not for any investor right now, unless it's Netflix at this point, Landon. A lot of red across the board today, unfortunately. And it's rainy here in Chicago, and it's rainy in the markets at this point. But Disney getting an upgrade today. That doesn't happen too often anymore. What kind of data do you guys have here on Mickey Mouse?
Yeah, this is tough. I mean, this is a company that's got so many, pots on the stove that you got to kind of look at each one and figure out what's going on because, when we look at, for example, if you just look at ESPN, that's a huge bright spot for them. I mean, they're doing great. Their revenue was up 8% year over year. Their income's up 15% year over year. They've got a new streaming service launching in the fall. They're going to integrate live sports and betting features in there. I mean, they're really going for the younger demographic. Very bullish on that side of things. And then you go over to the entertainment side. Even though entertainment was up, the revenue is up 9%. Everybody, they're focused on the Snow White flop. Moana 2 did a great job. Inside Out 2 did a great job. Deadpool Wolverine had good reviews, good revenue. But when you take a classic remake and you fumble it as bad as they did with Snow White, it gets investors just scratching their head. And I think the good news is that Disney sees this. They've paused all their remakes. They're kind of reassessing their strategy, and hopefully they come out of this and make better decisions moving forward. When it comes to the park side of things, it's tough. The experience, I'll say experiences side of things, it's a little bit tough. I mean, the revenue's up 3% on a year-over-year basis on experiences overall, but a lot of the data that we've got is showing weakness in the park side of things. We know that just when it comes to the web visits, the parks, the Disneyland and Disney Park are both Disney World and Disneyland, are both struggling a little bit on a year-over-year basis, but the cruises are killing it. I mean, they're up about 50% on web visits. So that we're seeing that, a lot of people are a little bit more concerned with the potential recession, inflation, tariffs, all of that. It's got people sort of paused. And we've talked about this before where, during the COVID lockdowns, there was a lot of pent-up demand, and people were more about living experiences and spending money on experiences and travel and things like that. I think a lot of people have checked that box, and now they're back to the normal life of, well, that's a little bit expensive to go to Disney World, and so they're booking less. They're a little bit less interested in that. So that's the sort of the experiences side of things. And then when you look at streaming, ESPN aside, that they're holding their profit, but they're decreasing the number of subscriptions. So their subscription growth, if you want to use that word, is negative. So they've got 125 million subscribers, but they lost 700,000 subscribers over the last quarter. So that they're going the wrong way on that, which is a little bit concerning. So it's tough because when you look at this stock, I mean, it is priced at a pretty attractively, frankly, but you want to know that they're going to make good decisions with the assets that they have. And I think that, for investors, again, the Snow White thing is just like, it's only $100 million that they lost on that, which, isn't a lot of money when it comes to the size of the company, but it's just, what kind of decisions are they going to make moving forward to leverage the amazing assets that they have, because they have an incredible array of things that they could push forward. Very strong portfolio, but you just want to make sure they manage it correctly and take full advantage of what they've got. So where they're at right now, I would be probably a buyer long term. I want to see, though, that they're going to make good decisions. But overall, given where the stock is, it seems to be a good buying opportunity long term. But the data definitely justifies the slide that we've seen. You don't want to see subscribers losses. You don't want to see web visits going down for the parks, things like that. So there's bright spots, cruises, and ESPN Plus. But there's also some negative sides to it. It's just such a huge company. You got to take all of that into account. And when you do, I think that overall it's a good investment opportunity at these levels. So I would agree with the upgrade, but it's not the best investment opportunity out there. I mean, I'd put Amazon over Disney any day at these prices. So, take that for what it's worth. But that's kind of where LikeFolio sits on Disney.
Landon,
when you trade a big company like this, they always get drawn into the negative news, and they kind of miss on the very positive news. Like, case in point, Snow White. It's going to cost them $100 million. What you don't read is they won 60 Emmys for some of the things they put out, and they've got a bunch of winners as well. You know, if you have one bomb, 2 winners, and you're back in the black on some of these. So how about cruise ships? 7 new cruise ships under contract. They'll have 2 new ones this year. And if you're under 10 years old, the Disney cruise is the greatest thing ever. If you're the father paying for the Disney cruise, not as much. You're not as big of a fan. But the kids love the Disney cruise. It's the best thing ever for them. So they've got so many good things going on, so many parts of this company that are surging, and they're investing in the right places. The problem, ESPN doing so well, but what's the backlash since now they're all in on gambling, right? How is the rest of Disney and their consumer base, their customers, gonna react to the fact that ESPN is now going full online sports gambling? So it's always you're weighing positive and negatives, but oh, by the way, online sports gambling, pretty profitable, Landon.
Yeah, it's one of the best things you can do. I mean, it costs $0 to take a bet, and you're making 10% every time you do it. So it's a great business. But yeah, I mean, my guess is that people mentally, they kind of separate, you know, going to Disney World and betting on ESPN. I mean, it's the same company, but it's just 2 different things. And so I don't worry too much about that backlash. But you're right. I mean, you get the negative news on one thing. It's not the 100 million, I think, that concerns them. It's the, what if they do this to Star Wars? What if they do this to all the comic book movies, right? And that's where you're concerning. So the fact that they're pausing on Tangled 2 and they're going to reassess gives me confidence that they understand that they can't make this same mistake again and again. So let them learn from Snow White and move on. But yeah, you're right. They have a lot of successes, and a lot of the failures or misses so far are more around the general consumer. So you got to weigh that in as well. Like, what's the economy going to do? How do people feel about the economy? Consumer sentiment down 11 points from March to April. People a little bit more concerned. That's going to pause people going to the parks, and you would think decrease the cruises, but the cruises have immense momentum right now. So maybe they'll lessen that momentum, but they're really killing it right now. So overall, what's the consumer doing with that? But again, that's such a not small, but it's not the entire business, right? They have so much going on. I think that they need to figure out with streaming, they've got to get the subscriber growth coming back. They were able to raise prices and get the revenue per user up about 4%, which is great. People are taking that, but they're also getting some cancellations. So let's keep those members. Let's grow the subscriber base. Let's strengthen the strategy around entertainment. Make sure that we defend those great brands, and then just let ESPN go crush it, because that's what's been working for them. And again, at these prices, if that's the strategy that they come out of this with, at these prices, this is going to look like a bargain a year or 2 from now, I believe.
You know what, Landon? They've got earnings in a couple of weeks, but I feel like I heard that from the management of this company, where, hey, we're going to do great things, but then another part of their business doesn't do well, and the stock price is the same price that it was over 10 years ago in 2014. It just feels like it's fits and starts here, and they don't have anything clear, even though they've got different silos of revenue generation. It just feels like one's not working at all times, or two's not working at all times. Is that the concern here that you guys see from your data?
Yeah, it's, I think that if you go back in time a few years, you probably have this exact same conversation, except for one it'd be different parts, right? This one's doing well and that one's doing bad. Now they're flipping, and you got all these different parts that you just got to get them all cranking on the same level. So it's tough when you have not just a company this size, but this diverse in the number of brands and the number of offerings that it has. And I think that can be a little bit difficult. So, I think it's going to come from the top. The turnaround for this company has to come from the top. It has to be aligning all of their brands and everything in the same direction and getting them all hitting on all the cylinders. It's kind of like your golf game, right? I mean, your driver and your irons are working, but your short game stinks. And then you figure out your putting, and then you can't hit a green. So it's like that's what Disney's doing right now. It just keeps bouncing around between one and the other. They got to figure them all out. And once they do, then this stock price is incredibly low, incredibly great deal. But you're right. Over the years, it's always been, well, this is doing great, and that's not so great. And then they turn around the one, and then the great one falls off. So, the good news is that ESPN is continuing its upward trajectory, and hopefully they can figure out the rest. Cruises obviously are a smaller part, but that's going in the right direction. They've got to get the entertainment moving solidly in the right direction, and they've got to get those subscriptions under wraps with streaming. So we'll see. I believe they can do it, but you know what? If you've been saying that for like the last 5 or 10 years, you're sitting on the same amount of money that you had before, while the S&P's gone up however many X's. So it's been a frustrating time for Disney investors, and like I've been saying the last couple of weeks, this is supply and demand. Yes, Disney's a good deal here, but just like you guys talked about with Amazon, I think that's a much better deal. So, where am I putting my investment dollars right now? It's not Disney, but if the rest of the market goes up and they don't, all right, then maybe I will.
Yeah. All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio. Kevin, when you